The Power of Bigness. Wall Street Journal has an article called Rockstar Law Firms Are Billing Up to $2,500 per hour. It highlights how many companies are appalled at these fees. And yes, some simply can't afford them. I'm going to give you my unpopular contrarian view here. And I want you to know that bigness is one of my favorite words. You'll hear it over and over and over again. It's such an important concept in investing today. Here's the unpopular view. If a business can't afford top-tier legal help, probably not a business you want to invest in. Does that sound outrageous? I don't think so. Rather than focusing on price tags, I focus on what is really happening under the hood. What are companies, in this case, large companies, paying for? These law firms don't offer just legal advice. They give you access to a network of financial resources, from bankers to private equity funds to hedge funds, and influence and expertise smaller, less expensive firms can't possibly match. If your company can't afford that kind of firepower, might not have the resources to compete at the highest level today. So this idea of bigness extends far beyond law. Over the past decade, big companies have been outpacing by a lot their competitors. It's not just happening in tech either, but we're seeing this play out in all parts of the stock market. Large companies outperforming smaller ones. S&P 500 versus the Russell 2000. What this also means is that the people who work at these companies, the top earners, aren't just compounding their wealth using their measly salaries of $100,000, $150,000, $200,000 a year. They're using their equity grants, their options, to far outpace their salary in compounding their real wealth. And what is this creating? You all know the words. Income inequality. Good, bad, I don't think we need to have a particular opinion about it, but let's just believe that it exists. And it's not just about wages. It's how wealth compounds at the top quartiles and deciles, the 25% or the top 10% of the economy. And you can see there's another great article about it. So the Wall Street Journal they created a new term, a H.E.N.R.Y. I'd never heard of it. You probably haven't either. But it means you're a high earner, not rich yet. H.E.N.R.Y. High earner, not rich yet. Maybe not my favorite. I think it's much worse than bigness. But the costs to be in the upper quartile of America have certainly risen astronomically. And that's what you might think. So what does astronomically mean? Wow, we've gone from $100,000 being someone who's well off in the late 80s or early 90s to, you're going to hate me for saying this, $400,000 is the new entry level to the upper middle class. 100 to 400,000 in 30 to 35 years. Does that sound crazy? Well, if you do the math, that represents a 3 or 4% growth rate, right, annually. Not that wild to get where we are today. It's probably a bit hotter than incomes and the broader economic growth that we see. And yes, services and education have all outpaced these numbers, and so has healthcare. But also important to understand that this cohort, in some ways, we can argue these are the best among us. They're frustrated because the assets that they want to purchase that will help them achieve freedom long term, and they can stop trading their time for these salaries that they're earning, it's risen much faster than that 3 to 4%. And those assets could be alternative assets. They could be real estate. We could also just look at the stock market, right? The pace of growth of all of these assets has been in the 5 to 15% a year range, not 2, 3, 4%. And so it doesn't make them feel great. While expenses are rising faster than their incomes, and assets have been growing much faster than those incomes. So this is not a problem in one scenario. If you come from a wealthy family, you have those resources, you already have those assets at your disposal. They've been growing nicely for you. You go to sleep, you wake up, and the little garden in the backyard where your parents live just continues to sprout dollars. So inherently, this creates friction between the relatively minimal class structure we have even here in the US. We do have one, but oh man, it's nothing compared to countries like Mexico, France, Germany, Asia, India, Class structures are much more well-defined, and it's very difficult to move between the different layers. So while this dynamic plays out, we're going to hear politicians offer populist solutions that most people love to hear to solve this growing divide. UBI, Universal Basic Income, minimum wage increases, Scott Galloway, smart guy, stupid idea, and tax the rich schemes. But here's my take. You know price floors and ceilings don't work. Oh, unless you failed Economics 101. But let the free market set the prices, whether we're talking about wages, services, or products. So that's how we make sure that there's an efficient allocation of resources. Is there regulation needed? Yes. Not all regulation's bad, but let's save that topic for another time. Let's go back to what this article was about. Bigness. Bigness, we already talked about big companies. Let's talk about private companies. More regional industries that you're familiar with, like home services and restaurants. They're seeing private equity come in, and they're rolling up the little regional or local businesses you're familiar with, your air conditioning contractor, your local pizza place, and they're creating national chains that can take advantage of economies of scale. And they use those economies of scale to overcome labor costs, input costs, and rent, which are all rising very quickly. So for investors, critical to understand if a business can't keep up with larger, well-resourced competitors, they're not positioned for long-term success. And this can help us decide what investments are best for us. So when we see a law firm billing $2,500 an hour, we don't focus on that sticker shock. We want to seek out the businesses that can afford that sticker shock, that don't look at it and go, oh my God, where is this money going to come from? Think about what that fee represents. It's the cost of bigness, and companies that can afford it, they got the muscle to win. And if a company can't afford it, probably not an investment for us. And back to the politicians, poly means many, and ticks are tiny blood-sucking creatures. They love to propose populist solutions, UBI, minimum wage hikes, tax the rich schemes, not real solutions. Let the free market set prices, not government policies. Businesses that thrive in this environment are the ones with bigness on their side. In today's world, the big are getting bigger, and as an investor, follow the smart money to where that growth is happening.